Something that no one's expecting is that interest rates don't go down because everyone's expecting almost a % drop this year.
People often use stablecoins to trade. They'll use their Tether to trade other crypto assets, and they often have a bag of Tether, so whenever they find something, they can just buy it instantly, right? So I guess it shows that there's an increase in demand for Tether and stablecoins, which is good heading into, new year. Alrighty guys, good day. Welcome back to another episode of the Crypto Catch Up by Tapping in Crypto. My name's Ted and I'm joined by Pav Hundal. Pav, how's things, mate?
Hey, doing well. How are you?
Doing very well. There's a bit to unpack this week.
Is that?
Not entirely positive. Like we're always giving you the hot tips of, kind of where the market's going. And so we'll give you kind of our thoughts of how we see things playing out and some insights as well. So, Pav, first of all, let's dive into your thoughts on the market.
Straight into it, eh?
Yeah, I reckon let's get straight into it.
Okay.
No mucking around.
All right. Well, let's it hasn't really changed too much since the last update we gave. So, unfortunately, we're stuck in this range on Bitcoin still. I guess the unfortunate thing is it's not really giving us a tell on which way it wants to go just yet. If anything, you could argue there's more bearish things about what's happening with price purely just based on technicals than anything else. So right now, for me, it's a case of 42 seems to be the line in the sand here. You can see we've been going sideways here for going on a week almost. So the longer we build up, my guess is the more explosive the move is going to be once we do pick a direction. So we'll see what happens. So hopefully by middle of this week, we get at least some sort of resolve. I think the unfortunate thing is there's not too many catalysts out there to drive price other than just the market itself. We had a lot of the big news come out last week from the macroeconomic landscape. I think the main data drop we had was like US jobs on Thursday or Wednesday night. But yeah, for me, another thing we can sort of look at to potentially help us sort of work out which way we're going is the US dollar index. So the reason why this is important is crypto. It's globally traded in USD. USDT usually is the dominating liquidity pair. So if this goes up, it's strength in the US dollar. If this goes down, it's usually when we start to see price appreciation on crypto. So it's not a 100% lock and step move, but it's very correlated. So you can see here from October 2022 to January 2023, that was most notably the last run. So that was that leg there. Yeah, what we're seeing now, I guess, is this particular range here. We've had a deviation, bounced off the bottom support range. So you kind of would expect this to first get to the midpoint, which we've just left. And then once you start to get above that, we start to head towards the range high. So, time will tell if this plays out. But what this does mean is if in the coming weeks we start to trek up to, 105 on the DXY, that could spell further downside for Bitcoin as well. There's nothing to say once we get up to here, we don't just break out above and start to head to a higher price like 110, 111. Anything's possible. The
stronger DXY is the worse it is for crypto. Is that what you're saying?
Pretty much. Like it'll set up, a great buying opportunity for those that missed out on the market. But it can also, obviously put a lot of people into depression if they've just recently bought into crypto. So we'll see how everything goes. But I think this week hopefully gives us a little bit more information to work off.
But I think most people understand or are pretty confident that the market's going to perform well this year.
Yeah.
And so I guess the more opportunity there is for buying low and capitalizing before we do see that uptick is that's a positive way of looking at it, right?
I think so. And, if we're talking about where could we go from here, there is a good cluster of highs, which the market does tend to like around here, which is 32 to 30K. So I'm not saying we go there, but technically speaking, that is an area of interest. I think the problem with Bitcoin right now is there's a lot of fundamental tailwinds behind it, halvening, ETF.
Yeah.
This whole supply and demand dynamic has shifted. So you might find when we do dip, we may not dip as far, or maybe we do. That's kind of what we're waiting to see. And I think the next couple of months will be telling to see what sort of demand there is out there for Bitcoin. But lastly, just want to touch on this as well, just in regard to the DXY. So seasonality is a big thing. And this chart is probably the easiest way to explain it. So seasonality is like the average movement of an index. So in this case, the US dollar over the course of the year. So this has taken all the data from the last 20 years and created like an average line of how price moves through the year. So some years follow a different pattern. But I mean, if we just look at this year, the DXY is up about 3% at the moment. So it's above what we'd expect by this time of the year.
Yeah.
But what this has shown is that the incline usually lasts all the way up until the start of March. So, even though we are outperforming this seasonality index, I guess what we're also waiting to see is, have we run too far on the US dollar? Is it due for a pullback, which would be good for crypto because it's just run too hot this year already? Or is this more of a time-based event where even though it's up 3% when we'd expect 1% as an average, do we still need to wait till February, March before people start getting interested? So around the Q1. And that's interesting because that's around the halvening too, which we've talked about as well.
So from a beginner standpoint, basically you're looking at this chart saying the DXY is going to go up until March, which isn't great for crypto. And then from there, it comes down pretty sharply, which is a positive sign for crypto and it lines up with the halving.
Yeah, correct. Okay. Correct. So it's just another way to measure this one. So I'll leave it at that. But it's going to be an interesting couple of weeks.
Absolutely. I've got a bit of a tweet here, so I want to jump into the macro a little bit. Like you're usually the macro guy. I know. I just like the degen crypto stuff, but this is a pretty telling interview. Are you able to play this video from the start so our listeners can hear? So it's Jerome Powell on 60 Minutes. Give me his thoughts.
Unsustainable fiscal path. The U.S. federal government's on an unsustainable fiscal path, and that just means that the debt is growing faster than the economy.
I have the sense this worries you very much.
Over the long run, of course it does. We're borrowing from future generations. It's time for us to get back to putting a priority on fiscal sustainability, and sooner is better than later.
The US is... So, the key line there, the US is on an unsustainable fiscal path, meaning things aren't looking great if they keep going the way they're going for the future. And like you said, like future generations are going to be impacted by this, so they kind of need to get things under control now. Do you have any thoughts on that?
Yeah, it's not... if you've been tracking this sort of stuff, it's not anything new. Like COVID, there was however many $1 trillion of printed, 1/3 of circulating money was created in the last few years. That's just a crazy stat in itself. So it's got to come from somewhere.
Yeah.
So if you create the supply and there's nothing backing it, you could somehow slowly get it out or reduce it. So that's all the tightening we've seen, increased interest rates, filling up the Fed's reserves, things like that. So I think the one thing I took out of this interview, as well as the FOMC meeting last week, which is the group of people that get together to set interest rates in the US, was that they still expect to drop rates this year. So that's kind of what everyone's waiting for. That's kind of the key headline for the year.
Yep.
But everyone was expecting it to be March. So now it's pretty much a 0% chance after these comments, what's been said last week. But the overall move is actually to rely more on data-driven insights to then be able to decide when's the right time to drop rates. So what I would say is, as much as macro is boring, it seems like that's probably going to be, we'll wait and see.
Yeah.
It's likely going to be what drives a lot of volatility in the coming weeks, months. And that's how things are shifting.
So what you're basically saying there is rates aren't going to be super pretty for the next couple of months, but you expect them to start turning around April, March.
Well, you got to also
April, May, sorry.
Yeah, and something that no one's expecting is that interest rates don't go down. So if that happens, that all hell could pretty much open loose because everyone's expecting a big, almost a % drop this year. So yeah.
I think everyone always talks about the soft landing rather than recession, and I think there seems to be more chatter around the likelihood of that now. So
yeah, I think it seems like they've engineered this. So soft landing is instead of going to a full-blown recession, they get the numbers and key metrics under control through slow tightenings and light stimulus between just to try and ease the impact on people. But who knows how this is going to head down. But it seems like all in all, it's been a pretty successful soft landing.
Yeah. Okay, let's dive into the fun stuff.
Yeah, it was pretty boring, wasn't it?
It was.
Again, yeah.
Cut it out.
Even I get tired.
Okay, so top movers this week. It's looking pretty red in the top movers. There's a few green bubbles there. I'm looking at Chainlink, up 28% in the last 7 days, which is good to see. More of a legacy token there that has gone through a couple of cycles. So obviously they've had a very big 2023 with the launch of their cross-chain interoperability protocol, which kind of allows for, in a nutshell, tokenization of real-world assets, right?
Let's access some data using blockchain tech.
Yeah, exactly. And it's kind of been it's considered by many to be sort of the market leader in terms of real world assets and tokenization. And obviously like the likes of BlackRock and Larry Fink have said that he sees that being a huge industry in the financial sector going forward. So Chainlink doing big things. I know I've got a tweet here showing that some of the whales are buying up Chainlink as well. So obviously demand is increasing there.
Oh, yeah. There's some bigger buyers. There we go.
Yeah. So just goes to show that like the smarter money's getting into Link, anticipating some big moves moving forward. So we always talk about the new coins being like the shinier, probably going to do better in terms of ROI, but it's good to see that, Chainlink, the ones that have been developing in the bear market and building are still there performing as well.
Yeah, I like using it as almost a bit of a bellwether because Link was what kicked off a lot of the 2023 altcoin cycle. So that initial strength there sort of trickled down into other assets, but everyone remembers Solana started running, was outperforming Bitcoin too. Link was right up there for quite a few weeks. And then as Link slowed down, everything else started going crazy and everyone forgot about Link. So I'm looking at this one pretty interestingly to see if it does garner some insights as to could there be still a little bit more room left on altcoins. But I like PYTH as well. Like I've been tracking that for a little while. So PYTH have more notably been like everyone got PYTH. Well, not everyone, but a lot of people got PYTH as an airdrop to begin with. But the way PYTH works is that you can stake it to help keep that particular infrastructure ecosystem running and vibrant. And there's lots of speculation that PYTH stakers will be eligible for airdrops, similar to Celestia, TIA. We saw an absolute run on that from almost, it started at $1. It's up at like 18, 19, 20 US dollars right now. So there's lots of speculation that staking your PYTH will enable you to receive airdrops. So I think that might be driving a lot of positive sentiment at the moment with the recent hoo-ha around airdrops right now. And then
PYTH's a Solana token?
Yes. Yeah, you can say it's like between that and the Ethereum. So yeah.
And we saw the Jupiter airdrop last week. I know you almost retired off the back of it.
No, I didn't.
But I forced you to come back to the podcast.
Yeah, sure.
But yeah, those Solana airdrops seem like they're the hottest thing in town right now.
You'd expect people if they catch wind of another airdrop opportunity, they're going to be like, I missed out. I want to get on this one.
So if you're kind of looking at those opportunities and seeing like there are tokenless projects on Solana, you'd start to think, okay, well maybe they haven't announced an airdrop, but like you'd think they will in the future. That's typically what they do, and see like what you can do to potentially get that airdrop in the future, because that's going to be a huge trend.
Always has been.
What's that?
Always has been.
Well, no, Solana airdrops.
Solana airdrops.
Yeah.
Well, they've always been good at supporting the community, and the community always gets behind it. So yeah. I agree. That's a pretty good shout. But other than that, there's not really too much else to call out. Like the Flare running hot as well, which I think a lot of people will be happy about. Might have gotten the Flare airdrop to the back end of start of last year, I think it was. So layer one ecosystem there. But yeah, that's about all I can see. IMX just performing as well.
Yeah.
But yeah, a lot of red. Even Injective, we've seen that one be so strong. It's down 13% this week.
Hate to see it. Alrighty.
So what else we got going on?
So
Tether.
A few news headlines here. Yeah, this Tether one's a big one. So Tether posted net profit in Q4 2023, $8.5 billion.
It's a lot.
Sorry, $2.85 billion. Yeah, that's huge, right? Just goes to show that these stable coins, they don't need to have volatility to make money off it, because they make money off, interest, earning interest on their reserves.
That's right.
Fees on transactions. There's probably a few other things, lending as well. But yeah, that's massive. And I just want to put out a stat here. So that's more, they made more profit in Q4 than Goldman Sachs, and they only have 100 or, less than 100 people employed with them. It's crazy.
Yeah, I can't wait for the next round of Tether FUD. It just doesn't make sense. Like, they've got so much money in the bank.
Yeah.
And I don't know if it says it in this article, but there is like some sort of statement that they're looking to rotate a portion of their profits into Bitcoin as well.
Yeah.
So
I guess what you can take from this is that people often use stable coins to trade. Like other people in, maybe less developed countries with unstable economies might use it as a hedge against their own currency. Like, I know Argentina is quite big on stable coins, but in a lot of cases, people use stable coins to trade, right? Because they'll send it to an exchange to trade where that doesn't allow like fiat onboarding. And so they'll use their Tether to trade other crypto assets, and they often have a bag of Tether. So whenever they're looking at the markets, whenever they find something, they can just buy it instantly, right? So I guess it shows there's an increase in demand for Tether and stablecoins, which is good heading into the new year. And yeah, like it just shows the overall strength of the market, I'd say.
Yeah, and I think you've got a chart here just showing just a week-on-week growth in the recent market cap of Tether.
Well, yeah, the market cap of Tether is at an all-time high. Yeah, so even compared to like the height of the 2021 bull market, like it's considerably higher than that.
Yeah,
and we still haven't really touched on. I guess we've just started that bull market, but still, like, it's going to be huge. Like, stable coins aren't going away.
Liquidity is what we want.
Absolutely.
Plan B. So I haven't heard from Plan B in a while.
Plan B. Do you want to give a bit of background as to why Plan B is quite well known in this space?
Yeah, he made a particular model called the stock to flow ratio, which is probably easy if I bring it up, which shouldn't be too hard. It's essentially like a live data feed chart that looks to model Bitcoin's price against a reference point that's built on, I think, a couple of factors like scarcity and like the time it takes to create new Bitcoin.
Yeah.
So essentially it's like a data model to try and track where future price is going, how over or undervalued are we from some sort of baseline fair value. So yeah, that's kind of where Plan B has come from. He's always been notorious as well for like some wild price predictions.
I remember last bull market, his prediction was
how big was it? I can't remember.
Over 100K.
It wasn't it?
And everyone was kind of banking on that, being like, okay, well, this model hasn't lied yet. And then it clearly was wrong, and like he kind of lost a little bit of respect in that regard.
You get that.
But yeah, it looks like he's made some predictions for this year. So he reckons the Bitcoin price is going to hit an all-time high in Q4 this year, around about October.
Yeah, okay.
Before we see a crash after that. So
October.
He's basing that off previous cycles whereby, 6 months after the Bitcoin halving, we see an all-time high, and then typically we'll have a crash or a correction there. And like in 2021 we did have that correction, but then it came back up and hit another all-time high. There's no indication here from this knowledge that he's indicating like that similar sort of dip and then come back, but October he reckons.
Yeah, right.
So we'll see about that. I know most bull markets last a year and a half, so you'd be looking at like end of 2025 to kind of
that September-ish something.
Yeah. To as like a bull market end trigger, I guess, by timing, but there's a bunch of factors that play into it. So yeah, what are your thoughts, Pav?
It's an interesting take. Like obviously be watching, I just like to watch price week by week because that's just what I do. But when I think about things in a long-term lens, I mean, why would we deviate from what's already happened in the past? So like, I kind of would be more subscribed to the year and a half, and then just watch to see what happens to price. I know historically, like October is usually like Uptober.
Yeah.
So usually it's a month where you see gains across all markets. That's just looking at just statistics, and I don't know. We'll see what happens. I'm going to say no.
Oh, okay, big call.
Yeah,
watch out for the headlines tomorrow. Okay, well we might leave it there, guys.
It's a bit of a quick one. Actually, I got one hot take for you.
Yeah, please.
So let's just play the game that crypto does go down from here.
Yeah.
So let's say we see a 30% crash, which is not uncommon
for Bitcoin.
Which could be 50, 60% for alts, if not 90% on some absolute stinkers. Are you going to get upset? Because we do see these sort of moves leading up to and around the halving.
Yeah. 30% is probably more than I would like. Like anything but 10, 20%, I'm probably comfortable with at this point in time. 30% probably spells that things are not where they need to be, in my opinion.
Okay.
Because usually around this time, we will have a bit of chop, but 30% is typically like a bit more impactful than what we typically have. So yes, I would think that there's a little bit more cause for concern than like a usual 10 to 20.
Yeah. Okay.
What about you?
Preparing for it.
Okay.
So I'll be ready for it if it does happen.
But do you think it's going to happen?
If it does, I'll be ready to scoop up a bargain. Yeah, that's my personal plan. Yeah. But I don't know. No one knows. The dynamic's completely different this time around to previous cycles. Yeah. But it's been pretty well documented. There's some sort of retracement either before or after the halving. I would just say keep it in the back of your mind.
Yeah, obviously we had in 2020 we had like the COVID crash.
Yeah, I don't think we'll get anything like that.
I think for us to have a 30% crash in this point in time, it would need to be like a catalyst driven crash. It wouldn't just be out of the blue.
Yeah. If I had to say anything, we're probably closest to what could have happened in 2015. So if I just quickly zoom across here, it wouldn't take me too long. But if we go to 2015, there was a period leading up to the halvening, which was here. Sorry, my fingers are too slow to scroll any faster. Here it is. So we had the halvening, and then in 2015, 2016, it was after the halvening, we saw a dip. Pretty considerable one, 30% to the T. But then once we had that, it was just off into the races. So, you know, just have the perspective of like the longer term probably doesn't change, but it could get a bit bumpy because we've got so much time still.
Yeah, exactly.
Unless you're talking to Plan B, he'll tell you we've only got till October this year.
Yeah, it's an interesting one, but there's so many analysts out there calling different things. So,
but that's what you need. You need to hear a couple of
multiple perspectives. Yeah.
All right, mate.
Alrighty, let's leave it there.
Let's wrap it.
Cool. Thanks, Pav, and we'll see you guys next week.
See you guys.